Hello everybody. So this video is entitled Epic Rebound. AI not dead after all? How many times are we going through this? AI dead, AI not dead, growth stocks on, growth stocks off. This is the volatility of Mr. Market. The market has been crazy volatile, and it turns out much of the losses of last Friday, we've recouped them. We've regained them. You have a Micron right now, which is at 986 in after hours, could reclaim 1,000 tomorrow after the sky fell for Micron and the stock traded down to the low 800. The market valuing Micron on Friday, Micron was valued at something like a 4x forward P, or 4 times forward P. Even though, as I think it's becoming consensus for a lot of analysts that Micron could very well one day be the size of Nvidia. It could very well be the size of Nvidia one day, Micron. That's how important memory is, and that's how real the bottleneck for memory is. And there's a lot of comparison of Micron's revenue charts and explosive growth and the crazy amount of profits that we're going to have, something like 250 billion of profit next 12 months. A lot of these analysis going around comparing Micron to Nvidia, saying Nvidia and Micron could have an epic run. Anyways, the fundamentals of the business are pretty outstanding, if you ask me. But the market likes to sell off everything, and it likes to buy it right back. It's manic depressive, as we say, as the intelligent investor says, and it's manic depressive based on macro whims. It's just the macro. The fears on macro is impacting these stocks. It's an issue with the denominator. It's an issue with people not knowing what's going to happen to the cost of money and the money supply and to the Fed rate cuts and the inflation. It's the same mess that we've been in since 2021, right? Since 2021, and the biggest rate hike in history, we've had markets that are broken, that look much more like a casino over the very short term. And why do they look much more like a casino? Because we don't know what the cost of money is going to be. So it's all about, if oil goes up, inflation goes up. If inflation goes up, rates go up. If rates go up, stocks go down. This has literally been 5 years, and it's been just annoying. The early days of the channel, I really wanted to cover the macro stuff more, but now the channel has taken a new direction where I cover mostly stocks that I think will beat the denominator. Anyways, I ramble. Let me show you the chart. Of course, if you look at the map, everything was mad green yesterday. Everything that was sold off on Friday recouped the gains, and some, Micron is $1 trillion company, so it's a big business, right? Some had even crazier moves, and I want to show you Nebius, case in point for Nebius. Now, Nebius, in Insight is always 2020, but Nebius was clearly a buying opportunity when I made that video a few days ago on Nebius. Now, what did I tell you? I told you I wasn't buying. I'm not buying because I'm on a holiday, and the time difference is 12 hours with the US, so I can't really follow the markets. That's point number one as to why I'm not buying. But I'm not buying either because how many opportunities have we had to buy the dip? Are we going to have another gray swan? I think we're going to have other gray swans. I think we're going to have other opportunities to buy the dip. Some of these dips may be even bigger than they've been. So that's kind of what I think. So I don't feel too bad about not buying the dip. Of course, had I been in the US, had I been following the market like I do whenever I'm in the US, I would have probably bought that dip. But I didn't do that. It's too bad for Nebius. Of course, Nebius, I consider it way too cheap. Even at 216, I consider it cheap. I liked it very much under 200, but even at 216, I consider it cheap. I mean, you're looking at one of the leading neo clouds, one of the best teams out there running a neo cloud. I like Nebius the best. I like it better than CoreWeaver or Iron. But this volatility is crazy, right? We were at 290, back to 164, back to 220. This goes back to what I've said before. Perhaps the best thing to do sometimes is to just delete the app and go on a vacation. Delete the app and go on a vacation. That's perhaps the best thing to do, because This is not a stock for a faint of heart. A lot of these volatile stocks are not for the faint of heart. I'll conclude with Supermicro. Lots of chatter about Supermicro potentially 5xing the revenue next quarter. Turns out you can't delay the backlog forever. Turns out at some point the orders hit the income statement. At some point your income statement is going to take in that revenue. And of course, Supermicro is surging 15% in after hours. Supermicro is also a very cheap stock in AI at a 0.21. As you can see, there's a lot of cheap stocks in AI. Nebius 0.19 on EV over GP over RG. SMCI 0.21 on EV over GP over RG, right? Micron is the cheapest of them all, at 0.15 on EV over GP over RG. I didn't put NVIDIA in there, but NVIDIA is 0.42. So NVIDIA is actually very, very cheap for a Mac 7 stock. For the leading company in the world, for the leading company of this generation, trading at a 0.4 is very cheap. If you look at stocks that I don't really like, for example, is AMD. I think AMD is too expensive. At 1.01, I think it's too expensive, right? Broadcom is a little expensive too, even though Broadcom, of course, has a clear leading position, and they do all of these ASICs. They have a business in many ways designing chips in many ways that compete with NVIDIA, but it's too expensive, right? I mean, why would I buy Broadcom at a 0.66 when NVIDIA is at a 0.4, right? To me, it's all about the growth adjusted price of the stock. What is the growth adjusted price of the stock? That's what it is. So anyways, epic rebound. Was that to be expected? Most likely it was to be expected, but I didn't buy the dip. I don't feel bad about buying the dip because I think we're gonna have more dips. I think we will keep having these valleys of despair and dips and then rebounds and then rebounds, and that dip may be coming sooner, unfortunately, than we think. I mean, I was checking out a 10-year 4.6. What a catastrophe! Well, I mean, what a catastrophe! This is like we are back at peak fear of the Mideast situation. We're back at peak fear 4.6. You have oil, as I record this, up 4% with Marco Rubio coming out and saying that it's not going well, or the talks are not going well, or whatever. I'm not interested in that topic. But oil at $90 is definitely not good for inflation, for CPI. It's not going to be good for inflation, and it's not going to be good for the Fed dropping rates. And if the rates don't drop, we're going to keep having these casino-like markets. We're going to keep having that, and we have more fears coming. Potentially new tariffs, right? A lot of these 10% tariffs are expiring. They need to be replaced by something, and so there's a lot of new tariff talk, tariff threat. I saw there was some threat with tariff on Canada again. I guess we're back with Canada tariff. I don't really know. And then Greenland situation is not resolved. This is not resolved. This was the gray swan of February 2026. We had the Greenland gray swan. I think we're in for another gray swan over Greenland. So we're gonna have. I think we're gonna have more gray swans. I think we're gonna have more opportunities to buy the dips. And hopefully they happen when I'm in the US and when I'm fully focused on stocks. I am right now taking some time away from stocks for health reason, right? Mental health, because this market has been crazy. So anyways, and I think that's what a lot of people are doing this summer. A lot of people are doing that this summer, enjoying the summer. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.